I'm Nikki Jovicic from LookUpStrata, and for today's webinar session, I'm joined by Luke Downie from Realmark. In this webinar, we're talking about better budgeting for your strata scheme. Luke has a presentation on this topic, and then we'll move into submitted questions. The information contained in this session is pertinent to WA legislation. Before we begin, I'd like to mention that the information contained in this session, including the discussions that arise from submitted questions, is not legal advice and should not be relied upon as legal advice. You should seek independent advice before acting on the information contained in the session. For any strata managers who are joining us today, this session attracts half a CPD point from SCA. Please stand by to receive an automatic email confirming your attendance over the next day. The email contains instructions on how to apply for the points. Very shortly, we'll be joined by Luke Downie from Realmark. Luke is a passionate strata enthusiast with over 25 years experience in the industry. Having formerly been employed as a strata lecturer, as well as having owned his own strata company, Luke understands the complexities in strata management and is able to apply this knowledge to set up strata schemes for long-term success. He believes strata living and working should be harmonious and conducive to building better communities, and this can be achieved through excellent communication, education, and a proactive and collaborative approach to helping schemes achieve their desired outcomes. Luke's in-depth experience and expertise in all things strata enables him to assist developers and original owners in foreseeing the future requirements of their project post-registration of the strata plan. Out of the suit, Luke enjoys the company of friends and family and is an avid West Coast Eagles supporter. Now, Luke regularly appears in the WA Strata magazine and contributes to questions received from the LookUpStrata audience about WA strata living and legislation. And just one of the articles that Luke has contributed to on our site has well over 5,000 reads. So welcome, Luke, and thank you so much for taking the time to join us in today's session.
Thank you very much, Nikki, and thank you for that flattering introduction. Other than maybe we probably should have kept the West Coast part out with how they're performing at the moment. And thank you everyone for joining us today. So I'll jump into my presentation now. I'll just share my screen if you bear with me a moment. Get this slideshow underway.
Wonderful, thanks, Luke.
Okay, so financial control and budgeting for strata schemes is something that, well, it's a conversation that can be quite in-depth. Today, I'm just going to give a brief overview and some tips and tricks that I use for better budgeting and better financial control for strata schemes. So what are the statutory requirements for budgeting is the first thing I wanted to look at. So the strata company budget, it is a statutory requirement for that to be presented at every annual general meeting for acceptance. The legislation also requires that the budget takes into consideration the 10-year maintenance plan. Now, obviously, that is where the 10-year maintenance plan is applicable, being a designated strata scheme, a scheme of 10 lots or above, or with a building replacement value of 5 million and above. Obviously, bylaws is something that also needs to be taken into consideration when preparing a budget. An example of which is some strata schemes have a bylaw that varies the way in which contributions are raised, so not necessarily by unit entitlement. So that's another consideration when preparing the budget. Your budget is passed at the annual general meeting by ordinary resolution, and variations to a budget also only require an ordinary resolution, except where it's under section 91.2, which requires a special resolution. So capital improvements, for example, would be an example of that. Okay, so budget preparation. So I just want to give an overview of how I approach budget preparation, and I'm sure there will be some tips and tricks in there for you to use when you're going through the same process yourself. In the early days of strata management for myself, I was one of these people that left budget preparation to the last minute. Would usually mean that it was an assumptive budget, and I mean assumptive because essentially what happens is you're looking at the previous year's expenditure and you're creating a budget to mirror what occurred in the previous year. And the reality is that in preparing a budget in that manner, the likelihood is that there's going to be a number of items that you're nowhere near target. So for me, budget preparation is a 12-month process. Now, that sounds time-consuming, but the reality is that if you're organised in the way you approach this, it's actually a time-saving method. So for me, when you produce the Strata company budget, essentially most software these days, you can export a report that gives you both spend to date against the actual budget. For me, that's a monthly review. So producing that report, downloading it into an Excel spreadsheet, and then adding a column where you have % of budget. So on a monthly basis, reviewing that budget to see where are we running in terms of percentage spend of the budget year to date. So obviously, if you're 6 months into a budget and you've got budget line items that are over 50%, then obviously you want to drill down and see what the concern is there, because the likelihood is that you're going to go over budget. Now, that's not going to be the case for everything. We all know that insurance is usually an annual premium, and if it's paid 3 months into the year, you're likely to be at 100% that in that 3 months. So also part of that process is as I do that monthly review and I'm drilling down, I take notes so that when I get to the end of the year, I have an understanding of what's occurred during the 12-month period, which is going to give me the information I need to prepare a more accurate budget. So if you can see that little example I've given down the bottom where we've got electricity expenditure running at 400% of budget, that needs to be offset by the income that's came in through sub-billing of 102,000, and water consumption down the bottom there running at 92% of budget. But the consideration there is that there was a burst pipe leakage allocation of $1,250. A great example of the types of things that need to be considered I've seen this year. So a lot of budgets that I'm seeing people prepare at the moment, they're not taking into consideration the synergy rebates that were handed out during the COVID period. So if the Strata company spend for the year's $3,000, they're putting in $3,000 for the next year, where the Strata company may have had a $1,500 rebate. So the reality is they're already behind the mark in terms of getting the budget accurate. So those sort of things need to be tracked. So as I mentioned, start 12 months from the end of financial year, keep the notes and review it on a monthly basis. Makes your job when it comes time to budget a lot easier, and works for a far more accurate and a far better budget. Know the variances and the impact events, which I've mentioned, and know what external influences. So another one that's very often overlooked is contractual increases. So in that spreadsheet that I create at the beginning of the year, I will go through and any contractual increases. So if the contract, the lift contract or the fire service contract is due for a contractual percentage increase in the 3rd or 4th month, I will put that into the spreadsheet so that that information is at hand. And it's also, when you're preparing the budget, important to know all that so that you're budgeting accordingly. Okay, so cost reduction. Now, most strata schemes like to keep their levies as low as possible, and reducing levies for the sake of reducing costs for this, or the budget for the sake of keeping levies down, is not the right approach. The best approach is actually to look and work through the budget to see areas where you can actually reduce the expenditure. So tendering services on a regular basis is one part of that. Tendering services, in my opinion, is a process in itself that needs to be well managed, and probably the most important part of that is making sure you've got a scope so that you're comparing apples for apples with those tenders. So my opinion is that strata companies should enter into the shortest possible contracts in a lot of cases, obviously not in all cases. Things like lift service contracts, lift companies are not going to offer 1-year contracts, but where possible, if the strata company can keep the contracts short, one, it avoids compounding annual increases. So that's where you've got increase year after year on top of each other. But also gives the strata company the control to review and change service providers if necessary. Now, the point I've got there about cheapest isn't always best. Probably a prime example for me with that is the fact that if we use a plumber, for example, you've got a plumber that works on a building for 20 years. They may be more expensive than their competitors, but their knowledge of the building is a time saver, and that in itself saves money. So if they're spending less time doing work because of their knowledge of the building, obviously that's going to save the strata company money as well. So changing contractor just because they're cheaper isn't always the best. So that needs to be taken into consideration as well. With environmental responsibility becoming a bigger and bigger thing, energy reduction and efficiency is huge. My advice to strata schemes that really want to work out whether or not they can reduce costs through energy reduction and efficiency should start with an audit, and there are plenty of companies that provide this service. So an audit of your building from an energy perspective will give you information in regards to how you can improve and become more efficient from an energy perspective. So probably the most popular way this is done, or the most common, is through solar installation. Solar installation provides the opportunity, obviously, to reduce electricity consumption, but it can also be a revenue raiser, which I'll cover in a little while as well for a strata scheme. Home energy efficiency retrofits, the most common one being changing the old fluoro lights out to LED lighting, can produce consumption savings for strata companies as well. Carbon abatement's becoming more popular. PV systems is another, obviously reducing daylight reliance. Energy procurement. So energy procurement's where if the overall consumption for the building as a whole is significant enough, you can go to a provider and attract wholesale pricing for your electricity consumption. With wholesale pricing, what some strata schemes then do is become an energy retailer. So essentially they attract the wholesale pricing. If they have an embedded network and solar as well, that obviously further reduces the energy consumption costs, but it allows them to then on-bill the electricity consumption to the end user at a retail rate, and it becomes a revenue source for the strata scheme. Some schemes choose to actually pass those savings on to the end user, but by becoming an energy retailer, it gives you the ability to do that. So it's another opportunity to save costs. Design's another thing that's being looked at more and more often with strata schemes. So changes to the building that are going to create efficiency. So obviously things like airflow, as an example, can reduce the heating and cooling effect of a building and create an efficiency there as well. And in this sector, there are a lot more government incentives that are being introduced from time to time that are also worth looking at as well. I see communication as a tool to use in the cost reduction sector. And if I start with insurance, communicating with the insurer for me is an important part of keeping insurance premiums down. And ensuring that the insurance costs aren't overly inflated. Now, everybody at the moment is experiencing increases in insurance premiums. We are in a hard market, so it may not necessarily be about reducing the premium. It may be about reducing the increase, if that makes sense. But what I'm talking about here is communicating with the insurer so to ensure that the steps or activities that the strata company are taking to reduce their risk or perceived risk, ensuring that the insurer is aware of them. So the types of things I'm talking about is implementing a 10-year plan, carrying out and completing activities in that 10-year maintenance plan, installing CCTV, anything that would be perceived as reducing the risk for the strata scheme. Those sort of things really should be communicated to the insurer, and having a conversation with them about the impact that has on the perceived risk of the strata scheme. Negotiation. I talked earlier about the plumber that's worked on a building for 20 odd years. Let's say, and I use a plumber, it could be fire service contractor. If you went out and tendered the fire service contractor as an example and got cheaper quotes, but you believe that the service provider is doing a really, really good job, that's a conversation you can have with them, and not necessarily to push them down to the same price as the others, but maybe there is some room for movement so that the relationships can continue. So negotiation is another opportunity for cost savings. And organised to reduce call-out costs. So this is one for me that too often overlooked. And what I mean here is when we talk about consumables for a building, we're talking about things like it might be sprinkler heads, light globes, etc. Keeping stock of those sort of consumables that could be used on a regular basis at the property or on the property can also result in reduced costs. So sometimes you might have a tradesman come out to site, needs to go away, get parts and then come back, which can add to the overall cost. By having those consumables or a stock of those consumables on site can be a way of reducing the cost for a strata scheme. Maintenance itself is probably a big one that's often overlooked in terms of what does the cost of lack of maintenance mean in regards to increased cost for a strata scheme and its budget. If I use an example of painting, you might have a downpipe as an example that's showing signs of rust. In the early stages, that rust is likely to be able to be sanded away, the downpipe painted and essentially as good as new. If it's allowed to go too long, the reality is that it will degrade or degenerate to a point where it has to be replaced. So it's an additional cost due to the lack of maintenance. So strata schemes need to be aware that that ongoing preventative maintenance does save them money in the long term. Service frequency, I've put the example in my slide there of sub-billing. And what I mean by this, quite often when I first become involved in a management, the strata schemes got sub-meter billing in place that's on a monthly basis. Talking to both the energy provider and the sub-meter reader about moving that to bi-monthly, it essentially reduces the sub-meter billing costs, so reading the meters and usually the strata manager's cost of sub-billing, reduces that to half for the year. So that's another opportunity to save simply by just a simple change to the frequency for sub-meter billing. Time of year also can make a difference. So if you've got projects planned, like installation of a new reticulation system, if you're going to carry that out in the middle of summer, you're going to pay a premium. Another example, roof plumbers, for example. So if you need a roof plumber to install new gutters and you're trying to get it done in the middle of the winter, again, you're going to pay a premium because those trades are in demand at those times of year. So if it's a project that isn't urgent and can be planned around the time of year, obviously taking that into consideration can also result in cost savings or cost reduction. Okay, so moving across now to look at more the income side of things. So the most, when we look at strata company income, the common sources of strata company income is the administration fund levies, the reserve fund levies, interest and status certificates and prescribed fees under the general regulations. Other types of incomes that can be generated for a strata company is if they are an energy retailer, as I spoke about earlier. Common area leases is another great example where the strata company leases an area of the common property to a third party. It may be an owner within the scheme or a tenant within the scheme, but essentially creating that income through that common area lease. And common area usage agreements such as phone towers, sustainable energy infrastructure contracts, laundry collections. And another one that is quite common is, particularly in commercial complexes, is the use of the car park area under contract with someone like Wilson's Parking can be a revenue raiser. So usually what happens with the car park situation is Wilson's themselves will make their money through a percentage of the takings and fine enforcement, and the remainder of the takings usually go back to the strata scheme. So that's another opportunity for raising income there. So when preparing the budget, it isn't all about expenditure. Obviously, the income side of things also needs consideration. An obvious consideration is the proposed expenditure, obviously. So if you're budgeting $20,000 in total for the year in expenditure, obviously you need to be able to fund it. So that's a consideration when setting the income. So the balance sheet becomes important. Sometimes strata schemes decide to budget deficit. So what I mean by that is they may have, as I said, $20,000 in expenditure, but they might have 20 grand in the bank and decide to contribute $10,000 from the cash at bank to reduce the amount of levies they need to raise, which is a budget deficit. So in that case, they would have a budget deficit of 10 grand for the year. Now, I raise this because I think cash flow needs to be taken into consideration at all times, but particularly if you're looking to budget deficit. So exhausting cash at bank is a risk, and probably one of the biggest concerns with exhausting cash at bank would be the ability to fund and pay your insurance premiums when they become due. Insurance premiums I mentioned because it is the biggest cost for a strata scheme in any one year. So it's the one that most strata schemes get caught on. And when preparing your budget and looking at both the expenditure and income, looking at the balance sheet and taking that into consideration, a cash at bank is an important part. But I urge all strata schemes to ensure at all times you maintain an operating balance. So ensuring that you're not exhausting the funds at bank, and that you maintain a balance that's sufficient enough to ensure that you never run into cash flow problems. Letters of an environmental or third-party influences. Obviously, I mentioned earlier in the presentation about the COVID rebate. From time to time we see, and particularly around election time, you will see government mandate or legislation that will influence income for strata schemes. It may be some sort of a rebate or handout that the government's offering, and those sort of things should be taken into consideration when setting the budget as well. And assessing the ad hoc collections from the previous year as well is also an important part of assessing the income needs for the strata scheme in that year. So let's take a look at mutual or non-mutual income, which is a question I quite often get asked about. So the principle of mutuality essentially is that you cannot profit from yourself. And strata company levies, or money received from owners, is considered mutual income. So therefore, it's not taxable income. Income derived from any other source is considered non-mutual income. So ATO requires that non-mutual income derived from the common property. It forms part of the lot owner's taxable income as a percentage of their unit entitlement. So to try and break that down for you, if a strata company raises $100,000 in non-mutual taxable income for the year, then each owner's percentage of that would be in accordance with the unit entitlement. So if they had a 10% UE, then obviously 10% of that 100,000 would be their non-mutual taxable income for assessment. In order to determine this, you should be able to obtain a tax summary from your treasurer or your strata company manager, which will give you the information you need to determine that. Strata companies are a company, and from a taxation perspective, they're taxed at the corporate rate, which is 30% of taxable income. So obviously your taxable income is less the deductions. And strata companies must submit a return in any year where their assessable income is $1 or more. So even if you're in $1 in interest, there is a requirement for a company return to be lodged. They must be registered for GST purposes if their proposed levy income for the preceding 12 months is going to exceed $150,000. Now, it's also important to know that they can opt to be registered if they're under that amount. And when you may want to consider being registered for GST, let's say, for example, you have a considerable number of works planned in a particular year. It may be even part of your 10-year maintenance plan, and your likely spend is going to be considerably more than your income for that year. Then the likelihood is that your input tax credits in that year are going to exceed GST collected, which would result in money back for the strata scheme. It may be that you want to be registered during that period of time. So a bit of a summary here before I finish off. So in terms of good financial management for a strata scheme, I mentioned at the start the monthly analysis from a budget perspective. This not only really helps and assists me on an annual basis when it comes time to prepare the budget, but it also really ensures that I'm getting a monthly overview and quite often can highlight something that needs to be dealt with throughout the year. All strata schemes should consider approval requirements. Who's approving the expenditure? Who's authorising the invoices to be paid? That is a consideration that all council of owners should give. Know your strata company's responsibilities. So the responsibility to prepare the budget is an example. The responsibility to provide a financial statement to the annual general meeting, what responsibilities do you have in terms of expenditure approval, and how much money can a council of owners authorise above and beyond the budgeted approval amounts. Arrears management is a real concern for a lot of schemes, and it's something that really should be managed well. I encourage all schemes to have debt recovery policy in place that clearly outlines to all owners. So not only having the policy, but making it available to everyone, that clearly outlines how levy arrears are going to be handled. Levy arrears really impact the cash flow, and extended levy arrears, so units that are allowed to go for extended periods without paying their levies, essentially means higher levies for other owners who are really cash rolling that owner from a strata levy perspective. Have an operating balance. I've discussed that. Remember that the balance sheet is important in preparing the budget. And the last point I put in there is one that's becoming more and more important, and that's be aware of fraud. So one example I can give you, a recent example that I have seen is where an invoice from a supplier sent to the strata company for payment was intercepted, bank account details changed on the invoice, and the invoice being paid. So having policy to avoid fraud, in particular if there's change in payment details on an invoice, phoning, not emailing, but phoning and checking with that contractor or supplier to ensure that those details are 100% accurate. So something else to save money for a strata scheme. So that concludes my short presentation for today.
Excellent. Thanks so much, Luke. That was great. It was really good to see some of the practical examples that you gave during the presentation. So thank you for that. And also how there's some really small changes that you can make that actually make a big difference. So that was great to see as well. And just one other thing I wanted to mention, you did mention cash flow there. And we were speaking with one of the strata managers from over on the East Coast after they had the big event with the flooding through it was actually this Southeast Queensland, it was a strata manager. And he was saying that the buildings that fared well out of that were buildings that had access to cash and that had a good balance, because they were able to action really quickly and they had the ability to access that cash that they had there, and they didn't have to sort of wait to go through the process of raising levies to organise people to come out and do repairs on the building. So yeah, I think that's important as well.
Yeah, I think in those sort of the example that you use, natural disaster, having access to your own cash, even if you're waiting for insurance, can expedite the process and certainly alleviate some of the pain that the schemes are experiencing. And the reality is we never know when it may happen in WA as well, that sort of thing. So fire is a prime example. We've had a few bad years with fire in recent times. So I 100% agree with that.
Excellent. Okay, that's great. We've had some questions come through. That's excellent. Thank you. We had one that was actually asking about the presentation that you did from Melody. So I might just mention that one before we jump into the submitted questions. And Melody was just asking, authorisation over budget, can I presume would this exclude emergencies?
That's a really good question. And so essentially, when we talk about expenditure approval, obviously approving the budget and annual meetings, approving that expenditure. The Act provides for power of expenditure above the budget for the strata scheme, which is essentially $500 per lot that the council owners can approve in any one financial year. Other than that, the only other ways of expenditure approval is through written notification, which outlines that process in detail, and the requirements in order to seek approval in that manner. Other than that, it's going to a general meeting. Now, obviously, common sense needs to prevail, and my suggestion when we talk about emergency situations is a council of owners should proceed with caution, and that's difficult to say because sometimes you've got to act quickly. So the reality is that my advice is committees should assess the situation, and if they feel they have an obligation to act quickly in an emergency situation, so life and death situation, or a situation that is likely to cost the strata company significantly more if they don't act, I would strongly encourage them to act. But under careful consideration, I also encourage council of owners, if they find themselves in that position, to document the process and the decision making well, so that if they are questioned on it, they can easily demonstrate the process, the decision-making process they've gone through before they proceed. And look, everyone's interpretation of an emergency or a situation is different. That's why I think it needs to be a collective approach from the council and be in agreement in terms of how they proceed in those situations.
Okay, thanks so much, Luke. And we did have a comment from Amy saying it was really enjoyable as well. And thanks, very interesting. Thanks for the feedback, Amy. Yeah, that's great. All right, we'll jump into some of the questions that we had submitted, and then we'll try, if we've got time, to mention the ones that have come in apart from Melody's as well in the chat. So the first one we'll cover is one from Mike. Can funds allocated to a budgeted item be used for a different budgeted item?
So, sorry, can you repeat that for me?
Can funds allocated to a budgeted item be used for a different budgeted item?
So I talked about power of expenditure. So the Council of Owners can approve above and beyond the budget amount. So I wouldn't suggest that you can shift or reallocate items from one budget item to another without going through a process of approving the amendment to the budget by ordinary resolution. But what the Council of Owners may consider as an alternative to that is that if they need to overspend on a budgeted item, that they consider whether or not it falls within their power of expenditure. So they don't necessarily need to move funds. They can use their power of expenditure to address that. But essentially, if you're wanting to amend the budget itself, then you need to go through that process of approving the amendments to the budget.
Sorry, I'm jumping in and out of chat while I'm doing this, so
That's
bear
okay.
with me. Okay, Richard. Richard asked, what is the tax treatment for any income earned using common assets? Our intent is that such activity would result in revenue that might reduce levies. That is, do individual owners need to declare any such income as part of their taxable income? And he gives a couple of examples. Use of surpluses or balances of the reserve fund invested in interest-bearing deposits or other investments, and using part of the common areas to generate income, such as mobile phone antennas attached to the apartment building, or placing an advertising billboard on the side of the buildings. I know you did cover this a little bit in the presentation, Luke.
So let me summarise that. And if I use the mobile, I'll start with the mobile phone towns and the billboards. Any income derived from that would be non-mutual income. So essentially would form part of the lot owner's taxable income as a percentage of their unit entitlement. So obviously not the full amount, just what their percentage is based on their unit entitlement. The statement regarding balance of reserve funds, so obviously interest is one thing, but if we're talking about using existing funds, cash at bank that have been generated through levy production for either the administration or reserve, that is mutual income. It's raised through levies, and even if it's not used in that year, it's still considered mutual income. So would not form part of the owner's taxable income.
Okay, wonderful, thank you. Now we had another one from Mike saying, as the new treasurer for our council, I've discovered a significant shortfall in the sinking fund levies being raised versus the sinking fund forecast, and a significant shortfall in the budgeted capital works versus the itemised capital works in the sinking fund forecast. There's no meaningful disclosure by the previous executive to either the ordinary committee members or the community. How do we move forward, and what are my duties and obligations as a treasurer?
Sure. Look, if there's concerns with the previous year's financials, so what it sounds like in this example is the fact that either the amount of levies raised or the amount of levies collected, depending on whether you're working on a cash or accrual system, doesn't meet the forecast. So quite possible that that levy notices that were issued could have been inaccurate and not enough funds have been raised for the year. In terms of the works, I'll come back to that in a minute, but if there's any concerns with any financial year, the best way to resolve that would be through the process of auditing. And in actual fact, I would encourage strata companies to audit on a regular basis anyway. It protects all parties. So whether you self-manage or have professional management, an annual audit is a really good idea to ensure that the integrity of the strata company's financials, particularly for self-managed schemes. Committees may find that if they carry out those audits, it's really protecting them And if you've got a management company, it protects both parties as well. In terms of budgeted capital works, the concern there is the fact that you may not have met some maintenance requirements that need to be carried out. So from the incoming treasurer's perspective, I think developing a plan and producing a budget that's really going to assist the Strata company in getting back on track. So, and I guess it's important also to prioritise how important were the works that should have been carried out, were they urgent in nature, and do they need to be brought up to date as quickly as possible? So taking all that into consideration, but really producing a budget that you as a treasurer feel comfortable with in regards to the budget, getting the Strata company back on track to meet those maintenance requirements and capital works.
Okay, we had one from Kevin. This one's quite long, so I'll just read through this. I currently reside in a strata estate of 60 units. At the AGM recently, it was announced that the COO had overspent the budget by $27,000 for the previous year. This included $7,000 for one item alone. At no stage were any owners notified about any of the items included being over budget prior to spending occurring. I've previously been chair of the COO at another strata complex, and it was very clear that any amounts of spending by the COO over around $3,900 would need to be run past all owners prior to any spending occurring. Is this correct? And also, should the strata management company have intervened in some manner when the overspending became obvious?
Good question. So I mentioned earlier power of expenditure, and I think you said 60 units there. So the power expenditure being 30,000 in any 1 year. So the amount certainly fits into that. The one thing I didn't mention earlier, and I should, is that that amount can be varied by a strata scheme, and a strata scheme can actually put a bylaw in place to set that amount as well. So I think it's important to be aware of what the expenditure amounts are for that particular scheme, but based on the legislative amount of $500, that $27,000 would be in the power of expenditure of the committee. When a committee is going to spend above and beyond the budgeted amount, even within the power of expenditure, it's always good to give consideration as to whether or not they think it's an item that should go to all owners for consideration, in which case if they feel that way, I would encourage them to do that by written notification at the very least, and gaining approval through that manner. It really protects them. But the reality is that unless the amount's been amended, the 27K would fit in with the power of expenditure. The last part I want to cover on that is in regards to should the strata manager have raise the issue, etc., or address the issue. I think it's very important from a professional strata management perspective to be completely aware of the current financial position of the strata company, and certainly be aware of where the strata company sits in terms of budgeted amounts. And I think strata manager really does have an obligation to ensure that they're keeping the strata company up to date and aware, and letting them know if they're likely to go over budget. The reality is that the strata manager can provide a strata council of owners with the best possible advice and guidance, but decision making still lies with the council of owners. So I think when assessing the decisions that are made, it's important to be aware of what has transpired. Has the strata manager gone through the process of giving the council of owners that information? Because they may very well have done so. Yeah.
Okay, we do get asked a lot of questions about the strata manager's role and how much control they have over, and I think it's great to make that clear, Luke. So thank you for that.
Thank you.
Okay, we do have one from Prue as well. We're currently setting our AGM agenda and budget, working with our strata manager. I've found over the years the strata manager always wants to inflate lines in the budget just in case there is an unforeseeable event. For example, we spent $2,000 on plumbing issues last year, but she wants to budget for $5,000 just in case. I understand the purpose of the admin fund is to budget for the foreseeable ongoing costs. Historically, what I've found is these inflated lines give the strata manager opportunity to waste money, spending on things because the budget is available, not because it's an appropriate solution, or sometimes they may spend without council approval, particularly with small amounts. What's the best way to plan an admin budget to cover the essential items without inflating it unnecessarily and therefore collecting more levies from owners than necessary? We have completed our 10-year maintenance plan, so much of the maintenance is now foreseeable, and we're using this to plan our reserve fund expenditure.
Yep, really good question. Two parts I want to cover there, and one is in terms of an approach to ensuring that there are funds available for contingent expenses that may arise. And inflating each budget item may not necessarily be the best way to approach it, but I can give some guidance in regards to how I think it should be approached. But also the role in budget preparation. So quite often strata managers prepare a budget, they take it to an annual general meeting, and to be honest with you, quite often don't really get a lot of feedback or input from owners or council of owners in some schemes. I think it's important to understand that budget preparation by a strata manager is to assist the strata company in the process. The responsibility for setting the budget, for presenting the budget, lies with the strata company itself. Preparation of the budget may be an agreed service in the management agreement, but I would encourage all council of owners to be involved in that process. I believe that you should proceed to an annual general meeting with a budget that's been signed off by the council of owners and that they're happy with it. And second of all, remembering that it is up to the annual general meeting to pass a budget, either as is or as amended. So budget discussion is an important part of that AGM process, and I would encourage all owners to be involved in that conversation and have some constructive conversation surrounding the budget, so that at the end of the day, what you're aiming for is a budget that's really going to work for the strata scheme. Now, inflating every budget line item to me is probably not the best approach. So in terms of inflating every budget line item in case you go over budget for that particular line item, as a method of producing additional revenue in the account for any contingent expenses really doesn't work anyway, for the simple reason that you're increasing that budget line item. So you're increasing the ability to spend on that budget line alone. If the aim or idea is to produce or create income that's going to be available should something untoward happen or pop up, really is part of the setting the reserve fund budget, but obviously budgeting contingent amounts, it should be part of the budget consideration as well. Now, I think an approach may be that if you're concerned about cost blowing out from a per budget line out rather than meeting contingent expenses, is set a percentage, and the council of owners agree on a percentage across the board. So if you think your spend is going to be so much per year, allow maybe a 3% above what you consider the spend to be, so that you do have that little bit of leg room. And that's if the concern is for each of the budget line items rather than having the need for an amount to meet untoward contingent expenses.
Great, thank you. That takes us to the end of the questions that had been submitted. So what we might do is jump to the questions that we received during the session in chat. So first one I'll mention was from Claire. She's asking, is a strata manager obliged to let owners know that there is no mutual income, or only supply this information if requested by an owner?
So I think that the strata company, so there's no obligation to provide that information, but I could, so the strata company should provide that information. It's not really covered in the Strata Titles Act, other than provision of information in general. But I couldn't see why a strata company wouldn't provide that information on request. Now, obviously, the strata manager acts under their management authority under the contract. So as part of if it's part of the agreed services for the strata manager to facilitate that, then I couldn't see why they wouldn't. It may be that some schemes want to put in place particularly if you have a large percentage of investment owners, for example, you want to put in place that information. So what I mean by that is make a decision that that statement's going to be produced and sent out on an annual basis in the financial year anyway, as due process. So that may be consideration for schemes to put that in place. as a standard thing. But it also brings to mind something else that I think I should mention on this topic as well, and that's in surrounding investment owners and depreciation, because a lot of investment owners overlook the potential to claim depreciation in newer buildings or where you're carrying out capital improvements. So particularly with new builds, a lot of investment owners aren't aware that they can actually claim depreciation on common property. As a percentage in accordance with their unit entitlement. So getting a depreciation report done for them, particularly in a new scheme, and you can even go back in years if necessary, which can result in significant savings for investment owners, is really a good idea. So obviously the types, down to the fixtures and fittings. So when these reports are produced, they'll go through and count all the light fittings, all the door handles, doors, pretty much everything to determine the depreciation rate for that investment owner. The other thing I should mention there is, if you've got a group or a large number of investment owners in a building, it's actually good to group together and get those depreciation reports done. The reason I say that is that assessment of the common property only needs to be done once, and then it benefits all investment owners in that scheme. So you can actually get a cheaper rate for the depreciation report. And I'll give a shout out to Asset Reports that do this, provide this service. They're a great one to use, but you can actually have a cost saving for investment owners if you actually band together and approach a company like that to get your depreciation reports all done at the same time.
Yeah, that's a great tip. Thanks, Luke. Thank you for that. That's great for all of our investor owners out there listening today. Okay, we had one from Pixie. How does a strata company establish a delegated authority for approval of expenditure for unplanned expenditure? Is this a subject of a bylaw?
No, it doesn't have to be subject of a bylaw. So in terms of, I think Pixie's questions surrounding authorisation to the strata manager or via the Council of Owners. So I think in terms of delegation of authority, I think that responsibility lies with the Council of Owners. And I would encourage the Council of Owners to make that decision via a Council of Owners meeting and minute that decision and make it quite clear. So it may be a delegation of authority to one or two committee members, or it may be a delegation of authority that is a two-step process. So I would suggest or recommend that any regular invoices, such as your lawn mowing, that's going to be the same amount on a monthly or bi-monthly basis, you may want to give authority for your strata manager to proceed with payment on those. Due diligence should always be used, so checking the invoices to see there's not any additional cost that shouldn't be there, etc., etc. But anything untoward, it may be that you want to set up an extra step or an additional process where you have one or two committee members that are citing the invoices and signing off on them prior to payment.
Okay, great. And we've just had a comment from Kayleen Arkell come through. Kayleen's from Lyrian Partners. She's been a presenter with LookUpStrata on one of our webinars in the past. So thanks for joining us, Kayleen. Kayleen's just say you claim depreciation on original new plant and equipment and the original building works, but not for infrastructure paid for using strata company levies. That's considered double dipping, but totally recommend ordering as a group as well. So she just put that point in there. Did you want to comment on that at all, Luke?
I agree. Yep,
yeah, correct. Okay, great, excellent. Thanks for that, Kayleen. Okay, we'll jump to Carol's question. A percentage contingency for unknowns is always a good idea in the strata funds and to include in discussions at the AGM when discussing finance. As a treasurer, I do a cash flow ahead of the AGM for when considering the budget, and again as we progress through the year. And she also mentions lessons to be learned from those events over on the East Coast, definitely.
Yeah, and that's a great approach. The other thing that makes me think of too is sometimes it's actually a good idea to bring 2 or 3 scenarios to an annual general meeting. And I know of 2 treasurers in schemes that we manage that actually do that. So they go to the extent of saying, okay, here's 3 different scenarios in terms of income and expenditure for consideration by an annual general meeting. So that's another approach that can be taken.
Okay, excellent. And we had a question from Pixie. With the sinking fund monies, what's the best method to have that money to earn interest?
Look, I would probably recommend or suggest seeking guidance from a financial advisor in that regard. Term deposits is probably the safest and most common used. But at the same time, with the rates that have been in offer in recent times, sometimes the revenue raised from it outweighs the benefit in some cases. So what I mean there is, if the strata company doesn't have any taxable income prior to that investment, the cost of actually producing and lodging a tax return may be more than the revenue raised through investment. So you've got to take that into consideration when determining whether it's of benefit to invest those funds or not.
Okay, great. Thank you. All right, we've got a comment from Melody about non-mutual income, and she's saying, is, as said, accessible in the hands of the owners by unit entitlement. If the income is to be retained and spent on further income earnings assets, how is that shown in the budget?
Sorry, so if it's to be retained and spent
on further income earning assets, how is that shown in the budget?
So once the money is received by the strata company, if it's receipted into the strata company funds, obviously it's going to form part of that cash at bank if it's not paid out to the owners. So it forms part of the cash at bank. If the cash at bank is being used or considered for covering expenditure within the budget, then obviously it's budgeted accordingly as a deficit. Does that answer that question?
Is that right, Melody? Just let us know in chat if you had anything more around that point. Not really. Okay, maybe you could get back to us, Melody, if you send an email in to me, and we can send it on to Luke and maybe expand on that point at a later date. And then there was just a question from Carol. So she assumes that common property depreciation is not just WA, but sits under the ATO. I do believe that's right. It is in other states.
Yep.
And okay, I'll just jump back to the other questions that were submitted previously. So Carol had asked, do I hear if, for example, a unit resident continuously parks in the visitor car park rather than their own driveway, the CAO could suggest introducing a common property lease, which might either deter or, if they continue, would provide some income to the strata?
So the strata company can always consider a common property lease. I don't know that a lease for parking arrangement would be the best solution in that scenario. I think that resolving parking is probably best done through providing exclusivity or exclusive use, introducing exclusive use bylaw, or merger of common land into lots, so creating external part lots. But there's so many considerations to be given there in terms of number of bays available, etc. But the reality is that, yes, a strata company can enter into a lease for a common property area, and it could be that it is a parking bay. That's certainly possible.
Okay, great. All right, we might have time for just one more. This one's from Ross. So how should the annual income amount be presented on the income and expenditure statement, please? Mine has no dates apart from the date of the heading. So if it is short, there's no explanation. It's hard to tell whether the income for the current year also includes any income outstanding from previous years, etc. Is there a standard layout for income required?
Yeah, so no real standard layout, but certainly the income and expenditure statement should most definitely state the period in which it's for. So if from what he's saying it's not showing that, then from my perspective, that it forms no purpose. At the end of the day, it's not really telling you anything if you can't determine what period it's for. I think it's also always good to, from the income and expenditure statement perspective, have a comparison to previous year, because it really highlights or gives you an idea of how you've performed against historically. Yeah.
Okay. All right. Well, that's wonderful. Thank you so much, Luke. I mean, we've grilled you there. We've asked you so many questions and you've had all the answers to help everybody out. So thank you. But we're coming up to the end of the session. So we just might say, if anyone did submit a question during chat or did send it into our email address, when they registered, and for some reason we weren't able to get to it today, please, if you go to our Ask a Strata question page on the LookUpStrata site, you can certainly submit it that way, and we'll get a response back to you as soon as we possibly can. At the end of the session, we always like to ask our guests if they've got any special news to share with us, or some award or event or something that's come up. So Luke, if you can share with us what's happening with Realmark and
absolutely. So Realmark Strata are very proud winners recently of the Strata Management Agency of the Year through REWA. You probably can't see that, but that's something that we're very proud of. We received that award last week, and it's for me, it's testimony to the hard work that the team here at Realmark Strata does. So we're very proud of that.
Excellent. Well, congratulations. That's really, really wonderful news to hear. And glad that you were able to share that with our audience today. So that's wonderful. So I'd just like to say thank you so much again, Luke, for joining us today. We really appreciate all of your valuable information. It's been a really, really session that's been packed full of some really great stuff for everybody.
Thank you for having me.
And hopefully we'll have you on again in the future. Thanks for joining us for this educational session. If you gained value from the information, please like this video. You can also engage further with LookUpStrata by subscribing to our YouTube channel, or by being kept informed about Strata news via our regular newsletters. Our subscribe link is listed in the description box below.